Hi, I'm Charlie Jamieson, Chief Investment Officer at Jamieson Coote Bonds. And I wanted to take a moment to talk about now is the time to defend portfolios. Clearly, the evolution of the news flow in 2020, coming on the back of what's already been a challenging 2019 in a macro context, is tremendously important and could be a very serious moment, a big secular shift in the way that economies and markets are going to go looking forward. We simply don't know how bad the coronavirus and the credit impact of that might be, but clearly now is a time where you must consider defensive asset classes and how you might navigate some of the volatility which will surely come with something of this episode. We harbour great fears that this can trigger a material credit problem via a corporate cash flow crisis. We're going to see that the world over. We know that many corporates have already sailing fairly close to the wind after having a fairly challenging 2019 trading environment at the hand of material trade war escalation. Now with a huge supply stoppage, which could be coupled with material demand destruction, it's very likely that we see some material problems. We're already seeing very low quality credit starting to widen quite quickly. The credit markets, for all intents and purposes, as I film this, are closed for business. There is very little new primary issuance. And these are markets that are, global bond markets 3 times the size of global equity markets. They are absolutely the financial oil that plumbs the entire system. If it's not flowing, the machine starts to lock up. And that is something that really we do fear quite materially as we look out over 2020. It's certainly a time to give great consideration to asset quality in portfolios. It doesn't mean you need to make wholesale changes, but it is absolutely the time to think through deeply the correlations of your asset holdings and how they might perform in a challenged environment, certainly where liquidity can be very, very thin at times. For credit at the moment, simply it is not functioning. There is no secondary market trading really going on. Primary is essentially closed. We need to think through deeply what this looks like. It's been 10 years since we saw this kind of stuff lock up. And clearly at the end of that, there can be fantastic opportunity, but you've got to get through that with a reasonable balance sheet in order to be able to fully capitalize on that. So we think now is the time to really think through what you could maybe add to portfolios to get you to that place and help smooth out that journey. We would really love to bring investors' attention to our global funds offered in both a hedged and unhedged format around the US dollar back to Aussie dollars, can provide incredible left tail protection as we're already seeing. And this thing can run and run and run. As we saw in the GFC, unhedged allocations to global bonds, incredibly powerful portfolio returns, which gave investors exceptional optionality and liquidity at the end of that time with a very large ammunition storage to go and consume their favorite growth assets at much more attractive levels. So now is the time to really consider how can you take advantage of what might come. Clearly there are a lot of opportunities available to investors. There's a lot more fund offerings and we think it's a fantastic time to be considering those. And we would certainly love to talk to you about what we offer as a truly defensive and protective alternative with regard to high quality government bonds. Thank you very much.